your self-appreciation inventory. Question: have you accomplished all you set out to do? You know, the uncanny thing is that most people can answer this question quicker and easier than coming up with a list of their self-appreciation inventory. It's because so many of us are so busy trying to reach our goals, our next goals, that we haven't taken the time to sit back and reflect on what we've really achieved till now. When you actually spend a few moments to write down these things and really reflect on them, you're more likely to be amazed at just simply how much you've grown. And the real power of that smartphone device, that memo pad, your computer system, the real power is that little memo app that's inside there. Use that map. That is the most powerful tool inside your entire phone out there. I want you to use that memo pad. You should have certain lists out there. One of those lists needs to be your self-appreciation inventory. Because, look, we cannot control the circumstances in life. They are like the wind. They are going to be thrown at us, and it's nothing more than the universe just testing us. And from time to time, when you get that wave of things that surprises that you don't like, you need to be able to remind yourself of the tremendous success that you already are. Building success, it happens one step at a time, one day at a time, 1 week at a time, and you need to have that self-appreciation inventory. Yes, folks, you are a tremendous success. Take a moment and celebrate. Well, let's go check out the success inside these markets. Depends if you're a bull or a bear. Right now, we've got the futures. Dow futures up 55 points, trading out at 14,902. S&P futures up about 8 points, trading out at 1644 and a little bit of change. NASDAQ futures up 21 points at 3083. Russell 2000 up 6 at 1024. King dollar up 31 ticks right now, trading at 81.55. Lots of movement inside the currency market. Goldilocks is up $5 at 13.74. Silver, hi-ho silver up 23 cents at $23.20. In fact, I think the Lone Ranger movie that's been out for a while. I need to go check on, let's see if I don't know if anybody saw that movie, if it's any good or not. Loved the Lone Ranger as a kid. Light sweet crude, that's up 58 cents, trade out at 104.44. Natural gas up about a nickel. That continues to be on the move northward. We've got copper up a nickel. If we take a peek around the globe out here, the DAX, that's up 103 points. The Nikkei, the FTSE is up 55 points. Now, the FTSE, boy, that was close to meltdown status as it broke its hammer candle yesterday. Over in Asia last night, over the Pacific, you have the Nikkei was down 59 points. The Hang Seng off 77, and the Shanghai off 6. Our call number is 877-927-6648. Give us a call. We can take a look at your stock and or any chart that you want, and I'll be happy to help you. Now, let's start off by, where should we start off? Boy, there's so many different places to look under the covers. Number one, the Bears still have, let me just kind of get this out here. The Bears have control of the market. They have for the last almost 3 weeks now. Maybe it's been a little bit, it's been about 3 weeks. Now, we determine that by just simply taking a look at the McClellan Summation Index. So as we take a look at the New York Stock Exchange. In fact, let's just go start here right now. We'll go ahead and pull that stock chart up on my screen here. So as we take a look at the summation index, as soon as the oscillator moved below zero, which was on, I'll give you the exact date, July 29th. So since July 29th, the Bears have, in my opinion, the way that I take a look at, a more global look, not looking at the S&P 500 and that summation index, and most certainly not taking a look at the Dow 30 stocks out there. Just the market breadth of the system out here. The Bears have had control of this market since July 29th. What is it? It's already August 22nd, so nearly a month out here. So they still have control. The only way for that position to change would be to have net advancing issues today, which is an impossibility. I like to say that things aren't impossible. Well, there are certain things in life that need more than one day to happen, and that would be for the Bulls to actually take control of the marketplace. You'd need 3,768 net advancing issues inside the New York Stock Exchange in order for the Bulls to effectively take back control of the market. Now, what does that mean? That means that any movement higher that we see in the market would be a bounce. And a bounce doing what? Well, most likely it's a bounce forming the B to a C of an A to B equals CD down. That's what would be unfolding in the marketplace. Do I expect that to happen? The answer is I do. and there are plenty of signals out there. And so I'm the one I'm probably one of the few out here that is calling for a turn. Now, we're going to understand whether or not that call is any good or not, whether it's worth its weight in I don't know, maybe it's weight in gold out here. And we're going to know that during my opinion, we're going to know that during the first hour of trading. Why? Because every rally that we have seen, especially in the futures market in the morning, has been sold. So we're going to find out very quickly here between 9:30, I would say between 9:30 and 10:30 while I'm on the show with you today, whether or not that we are seeing a slight change in trend in the marketplace. Now, as we take a look at the New York Stock Exchange here, which is the wider breadth of the market, what we can also notice is coming off of that June 24th low, from the June 24th low, which was 88.14.76, all the way up to the high that was put in on August the 2nd, that all that it's made thus far is a 0.382 retracement. So the retracement, so the damage that's been done for the wider breadth of the marketplace is really not so bad. Not bad at all, considering that this thing has been in a bearish mode for nearly a month out there, certainly 3 weeks since the 27th of July. So have we seen a pullback and a correction? Well, of course we have. But we knew that we would see something like that. Just simply the markets had been in a overbought condition. If we go just simply take a look at the Dow, we'll pull up the Dow here, and we go back to that same time frame. Well, instead of going back to the 27th, we'll go back to August 1st, August 2nd. You can see that it was up at the upper extreme of that relative strength indicator, up at a level of about 68, 70 really gets you into that range there of being into the extreme overbought condition. When it's overbought, one of two things are going to take place. It's either going to be a move sideways to work off that condition or a pullback. Well, inside the Dow, we have certainly seen that pullback. Now, what we're going to do is we're going to go back into the 30-minute futures chart of the ES Mini out here. As we take a look at this, and if you don't utilize Fibonacci expansion and contraction, please do yourself a favor and learn that technique out here. And I'm going to show you the reasons why, because oftentimes people say, well, why did price stop at a certain level? And if we go take a look at yesterday's move in the currency markets, in the futures market after the FOMC minutes were released out there. And the great news is we can pay attention to the stock charts and understand what's going on. So that first push down that we saw, remember yesterday we were taking a look at this little yellow box that you're looking at on my screen. That's the 14-point consolidation zone that the ES Mini had been traveling in. Of course, we said once we see a break of that area, one direction or another, we should see about a 14-point move. That would be 1627-ish as the low in the ES Mini. I won't give you the number up to the top because we haven't been there. Now, the first push down, that first reaction in the marketplace. Now, if you had this tool on your screen as the ES Mini was being pushed down, what you would have seen is a move between swing points of a 1.618 expansion. Look, the numbers that you want to be able to track, and you can do these things in advance, so you don't have to have this tool that automatically calculates it, although it's one heck of a nice tool out there. But what you want to be able to understand are 1.272, 1.618, and occasionally you get that 2.618. Well, we've got them all on my screen here. Hopefully you're watching us on Tiger TV. If you are listening on your radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, the live stream of this can be obtained on your smartphone device. Just go to the homepage of TFNN.com. On the right-hand side, click on that button. You'll get the show streaming live, or you can always go back and watch the archive. Well, not always. I think you can watch it for about 5 days out there. So you can watch the archive of this on Tiger TV, Channel 9. Now, the first push down as the futures moved all the way down to 1636.25. And somebody could say, why did it stop there and then reverse? Remember, the body of a candle is the essence of price. So this consolidation was never broken, not during that 30-minute session of 2:30. All that it did was it moved down to what? A 1.618 expansion of a set of swing points. And then, just like a trampoline, if you could picture a trampoline, it trampolined up and it moved right into the resistance, right in the upper boundary of that consolidation zone. Getting up to a high, coming into the 3 o'clock time frame, gets up there at the 1654.75 level. Question, did Steve-O take a long position? The answer is yes, I did. And was I out as it got to 1653? Most certainly was. And when you got back to the top of that consolidation, was that the time to go ahead and take a short position? Was your back up against the wall? It most certainly is. You want to use these consolidation areas. You want to use these Fibonacci relationships because they can help answer so many things. Well, you might ask the question, well, Steve-O, when the futures were really pushing down last night into the 8:30 time frame, down to a low of 1632.75. Why is it that you went long? Well, number one, there was a 1.272 expansion of that last set of swing points out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And now let's go back to this 30-minute chart here for the S&P futures. So you had the market moving down 8 o'clock last night, 8:30 last night, making a 1.272 expansion of a set of swing points out here. And we also had the market, if you again you take a look at the middle section here, the red line, the red squiggly line, going across the bottom portion of my chart out here. That's that relative strength. That's that 14-day relative strength index that we're using out here, and that was where? That was in the oversold condition. So you got a nice expansion of swing points. Now, you don't just take that trade. You wait for the bulls to show up. You wait for some type of bullish configuration or some other techniques that I teach all of my clients, my subscribers out there. And you got to wait for the signal. You got to wait. So the bullish candle is just going to be your first signal out here. You got that signal coming in right here at 9 o'clock last evening. Then what was perhaps most important was what was that first retracement? What was that first retracement on the move back down? Now, I wasn't up here, but it was midnight. It came back at, because I just simply had my stop underneath the low, a couple points underneath the low from 8:30 last night. When I woke up this morning, was pleasantly surprised to see what? To see that first retracement that came in at midnight was a 0.786 retracement. Now, what's interesting here, take a look at that 2.618 expansion of swing points that we had before we had the first move down. Now, this is as price got back into the consolidation zone. Now, this consolidation pattern, this highlighted yellow area, this has been on my chart, as you know, for days. Several days. Going back to last week. All you do is just continue to expand it out to the right-hand side, but don't adjust the top or the bottom. That was set up a while ago. When you break out of a consolidation, what you like to see here is you like to see it go back up and test that level. Now, what you want to see from it, in this case here, from a bearish side, you want to see it go up and test that level and then do what? That's right, reject that area. Because if it rejects it, it says, you know what, the break of the consolidation area was real. If you get back inside it, what does it tell you? It tells you, you know what, you can go all the way back up to the top. Now, what's also important here is if you come off of that first retracement at midnight here, when you had the ES mini down at 1633, again, it's only a 30-minute chart that we're looking at, but this works on all time frames or whatever it is that you trade. What's most important was it got back inside the consolidation, came back and tested the bottom, and that was coming in here at 8 o'clock this morning before we saw another bounce up. Doesn't mean this is going to hold, but it was only a 0.382 retracement, which says that, you know what, that's a very strong, that's the strongest retracement level that you can have out there. So we'll see. Now, where's real resistance? That hasn't changed on this chart. So if, in fact, we don't see a sell-off here during the first hour, which is a possibility because all of these rallies have been sold. So you got to understand, I'm in a trade now where I can't lose. My stop has been adjusted, so I'm in a trade that I can't lose. If the market moves down, takes me out, I'm still ahead of the game out here. So I'm not suggesting that you chase this. I'm always suggesting that you take the trades when they're most advantageous to you. Get in those trades, whatever the time frame is that you're trading. Just be patient. Wait, you want to buy when that relative strength indicator is down towards the bottom. You want to sell when it's up towards the top. And, folks, we can take this chart back as far as we want, and you'll see that the bottoms are formed where you get significant or you get bounces is always when you're coming from where? When you're coming from those oversold conditions. Likewise, you'll see retracements coming from the top when you get into overbought conditions as well. So use this. This is a great set of tools. Use those Fibonacci, use the consolidation levels, and please use these expansion levels from good old Leonardo Fibonacci. Let's go out to New York to Alex, who's been kind enough to hold. Alex, thanks for holding. Thanks for calling. How are you this morning?
Very good, Steve.
You wanted to take a look at the IBB. That's the ETF for the biotechs, I believe.
That is correct.
And tell me what you're doing and how I can help you.
Okay. I'm long for much lower prices, and on this pullback, I bought some more like 2 days ago.
Okay.
At 187.50, and it's had a nice bounce from that 187.50.
Yes.
I think it's going back over 200. Do you agree?
Okay. So now you're in this for a very long time. So this is going to be a long-term holding for you. You just added to your position, or are you really?
I'm thinking of taking a profit on this new position.
Okay.
Because what I'm holding at is just a little over, my average cost is a little over $100.
Okay, all right. So a very nice trade out there, by the way. So if we take a look at it, the first area of resistance, so we're gonna follow up on this, Alex. If you can be good enough to hold through the break and after the market opens, then we'll come right back to you. But the first area of resistance here is that downdraft from August 14. There was a downdraft of 1 million shares, and yesterday's move up was on 966,000. So that was pretty decent, but it did hold as a resistance area. What you want to see today, you want to see this close above the 193.16 level. And if you can do that, that's what will set up a run probably to that swing point high. But can you hold through the break?
Absolutely.
Okay. We'll be back with Alex in New York. We're taking a look at the biotech ETF, the IBB. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 12 points, trade out at 14,909. S&P's up 4 at 1647. Composite up 18 points at 3618. Russell 2000 up 3.5 points at 1025. Google up a buck. Apple up a $1.50. Microsoft up 59 ticks right now, up nearly 2%. You've got Intel up about 0.6%. That's up 14 pennies. To the upside here, Hain Celestial, Hain, is the ticker symbol. They're up a nice 13%. GameStop, GME, up 14% this morning. Children's Place Retail, PLCE, up 10% this morning. Baidu up 2 3/8%. Amgen up 2.5%. Alex is going to be glad to hear that because Amgen is one of the top 5 holdings inside of the IBB out there, so that's up 2 3/10% out there. You've got to the downside, Abercrombie and Fitch off 20% this morning. We'll see. That's coming into trading into a gap that had some nice volume-wide price spread. We'll see whether or not that area is going to hold. Sears Holdings down 7% this morning. Hewlett-Packard off 10%. L Brands off 3.5%. Let's go back out to Alex in New York. We're taking a look at the IBB. Now, the IBB, folks, that is the ETF for the biotechs. And now, Alex, I've got the IBB, the daily chart, up on my screen here. Yes, did you have a question?
Yeah, I just wanted to mention, I was keying off the date of July 12th.
July 12th. You're keying off the date of July 12th to determine
I wanted to buy underneath the low of that day.
Absolutely. Absolutely. No question. And so that was a good move, a smart move. And what Alex was looking at, folks, was he's looking at a nice sign of strength there. You had 2.2 million shares, wide price spread. Went from the low of that trading session from 188.46 to 194.33. So you're absolutely right. Now, the black line on my screen,
and I got a chance to buy at almost $1 lower than the low of that day.
Exactly. Now, one of the things, so while you're looking at that chart there, because that was a sign of strength, and so nice buy, absolutely nice buy. Now, what I'm looking at on my screen here, when you ask the question, I'm looking for areas that I would use as logical areas of support and resistance in order to really help answer your question. And the support level, so you had a nice sign of strength coming right after a support level occurred. And that support level that I'm looking at is really the gap up that occurred on July 11th. So between July 10th and July 11th, that little open window should have held as a strong support. Now, price never made it down to the low of that session, 186.66. But that's really your area of support on this. Because if it falls there, your second level, your sub-level of support is going to be the high of July 10th out there at 184.70. So that black line going across my screen just helps me to identify the area of support. Now, likewise, I want to understand where resistance is. And resistance, in this case here, is likely I'm going back to the candle session from July 23rd. On July 23rd, that formed a bearish engulfing candle. And the top of that should have held as resistance. Once that resistance was broken, then it should have acted as a level of support. And it really had only been tested once. So I think the first area, what you first need to see today inside your trade, your short-term trade, is you want to see this close inside 193.16. You'd really like to see it close above 195.43, but right now you got to take one small step at a time. And close inside 193.16, what that will do is that will go ahead and negate this logical area of resistance. That's your first area of resistance that you're up against because of the gap down that took place on August the 15th. So that's the first place that I would be watching, because yesterday, all that it was, even though you had good volume, it was a test of that resistance area. If you get 3 tests of a resistance or a support area, it becomes pretty anchored and something you should absolutely pay attention to. So I would first watch that today. If it gets above that and closes above that, your next level that you've got to pay attention to on this trade here is going to be 196.97. you said you wanted to see it get above 200 as it comes into 196.97, or it's coming into really the downdraft from August the 6th, which you should be able to do. You just want to see it coming in with more than 764,000 shares. So if you do that, then you probably will get a test or close to a test of those highs at the 201 level out there. Yeah, so that's how I see it on the daily trade. On the weekly trade out here, if we take a look at candle formations to look for some weekly resistance areas, and again, we're looking at the IBB folks. You had on the weekly chart, you had this little bearish engulfing candle. So the weekly is also saying 201.47 is a resistance level. Now, because you're in this trade, you're managing it. If you do get a close above 201.47, that should act as support. So that's the only bearish configuration that you've got out there. But it says, weekly and daily, you should run into some, you want to fasten your seatbelt there. Maybe take some of your profit. It sounds like you know how to trade this really well. You can give us a lesson.
Oh, I've been following this for a long time. It's very volatile. But
now what I would do, this.
Long term, it's clearly in an uptrend.
Oh yeah, no question. It's in a great uptrend now. The trick on this here that you need to take a look at. Here's what I would be doing. Five equities make up like 40% of the holdings. Great equities too: Celgene, Gilead, Amgen, Regeneron Pharmaceuticals, and Biogen, BIIB. Just pay attention to those 5 equities to see what they're doing, and that will also help to paint the path for you, paint the way. All right.
I trade those 5 in a virtual setting.
Perfect.
So
perfect.
That way I get to see those prices continuously.
Absolutely. And you really need to do that. I mean, that is the smart way. So you're giving a great lesson to all of our listeners out here, in a way that you're trading the ETF and you're really paying attention, in this case here to those 5 because they represent such the significant weighting inside there. Oftentimes you'll find that, the top 10 in this case I know equal more than 50% of the weighting structure inside the IBB. So nice trade out there, Alex.
I actually have all 10 in this virtual site.
Ah, okay,
so
good.
I'm able to get the prices instantly by pulling up the virtual site.
Good, yeah. So pay attention to that because that'll give you some first signs, indication of some troubles out there. So looks like a good trade right now. Thanks so much for listening, Alex.
I have a great time listening to your show.
Great. Glad to hear it. Thanks for the input.
Right.
All right. Have a nice evening or afternoon and evening as well. What the heck? All right, folks, so let's go out to Lou in Nashua. Lou's got a question about the ES Mini. Lou, thanks for calling. Thanks for holding. How are you this morning?
Yes, fine, you.
Excellent. Thanks for asking. On the ES Mini, tell me what you're doing, how I can help you out here.
Well, a spot to reshort.
The time to reshort?
Yeah.
Okay, so what you want to do, so we got the ES-Min, I've got the 30-minute chart up on my screen here. Now, one of the things that I'm looking at, so there are a number of factors that I used this morning that I included in my newsletter service so that all my clients understood the reason why we're looking for potentially a significant bounce here. And the first element of that is going to be what transpires during the first 30 to 60 minutes of trading here. And so because all of these rallies have been sold. Now, in the case of the ES Mini, when it gets up into the 1653 to 1656 area, 1657, that's what we're going to find out because that's where she's headed to right now. It's at 1649.25. 1653 is the likely first target, maybe getting all the way back up to the top of this consolidation range at 1656. I can tell you my exit on my trade is at just below 1653 out there. I'll be happy just simply to take those profits and then go ahead and pay attention and see what the ES Mini is doing now. That's where you would take a look at putting on a short, right around 1657, because maybe what is going to take place here is nothing more than trading inside this consolidation range. Now, I've got enough clues out there that tell me that's really not the case. And so if you're going to go short at 1657, you can't give it a lot of room out there. Maybe, you're giving it 3-4 points, something like that. And if you get a close above that area, what you're looking for is the ES Mini to come back down and test the 1656-ish to 1653 area and reject that, and that becomes support. What you're looking for, and if that's the case, then you want to start taking a look at some long trades. Now, the assumption here is that you're going to be trading on intraday chart out here versus a daily, because all I'm really expecting at this point in time are for things to get back on track and for the market to form the B to a C of an A to B equals CD down. But so that's what I expect, is that we'll see the ES Mini get up to that level. But that's where I would put on the trade.
Okay.
All righty?
Okay, Steve. Thank you.
Hey,
one more question. Yeah. The euro. Where do you see that going?
So if we go take a look at the Queen, if we take a look at the euro out here, give me a second here. We'll pull up the daily chart first to take a look at the euro. The euro-U.S. dollar currency pair has been trying to break out of the swing point from June 19th out here. Now, the euro pulled back, but it's still trading with inside this bar here from August 20th, that little upthrust bar that pushed into the top of the swing point from June 19th out there. It wasn't able to hold it, so it's acting as pretty good resistance. But until we see it close below, I would say, the low of that session, the low of August 22nd out here, 1.3322, then I'm in a situation where I'm not in the trade on the euro, and I would want to see either a close above that June 29th area to tell me, the June 19th area, or a close below the candle from August the 20th. So I think you have to be patient here. Right now it's still in an uptrend. So right now it's still in the uptrend out here, and says that it may want higher price. But I say may because until I know what it's going to do with regard to this August 20th candle, the prior trend that's in place is still out there for me, which is a longer-term trend. So I would wait for this to, if it closes above the 134.15 level, that's the June 19th area, you could take a look at a short-term long trade. But, of course, you've got to take a look at what's going on inside the shorter-term charts out here. The euro-U.S. dollar right now, if we take a look at it to understand why it was bouncing here this morning, if you trade the euro, you certainly want to also use the relative strength, relative weakness indicator. As it pushed down into 630 this morning, it got into a oversold condition, and we've seen a bounce here. Now on the 30-minute chart, you can see that it's established a downtrend out here. So on the 30-minute chart, if we just simply come off of the high from 10 o'clock yesterday, what you can see is clearly a downtrend. Lou, are you watching us on Tiger TV?
No, I'm not.
Okay. So if you get a chance to take a look at your 30-minute chart out here, all that I did, it's a very simple tool that you can use. I just went back to the high on the 30-minute chart, took place at 10 o'clock yesterday morning out at 134.50 out there, and that's the top of the trend. And I just touched the next candles coming down. And what's interesting here is that on a little bounce up yesterday at 3 o'clock in the afternoon, August 21st, price ran right into that trend line. So inside the euro out here, if you get a close above that trend line out there, that would be suggesting that it will go back and visit the top out there, go visit the high. So put the trend line on a 30-minute chart. I think that will help you out as well.
Yes, it will. Thank you.
Okay, you bet. Thanks so much for calling. Let's go take a look at some of these stocks here, folks, that are popping and dropping. Let's go over and take a look at Abercrombie & Fitch. A&F is the ticker symbol. Now, this had one heck of a nice day on November 14th. Wide price spread, accelerated volume, a real breakout. Now, that real breakout created one heck of a gap as well, and prices traveling inside that gap right now. That gap was created November 14th. If you take a look at that candle session, you want to take a look at a wide-ranging bar. Now, that's why you visually need to be able to paint the picture. Sometimes if you've got tools where you can just simply draw it in, because somebody would look at that gap and say, oh, boy, the gap would be scary. I say, no, that gap should be acting as a place of support. Now, you like to see those gaps get tested. When will they get filled? Yeah, they may. They could get filled. What you want to do is use the gap, use that as your friend. Because if you want to take a look at what real wide price spread looks like, if you just go color it in, I'll just do that here right now, and we'll go from where the open was to the close of the prior session, and I'll go ahead and I'll paint that green out here. That is what wide price spread most certainly looks like. If I go ahead and I move this over here, because what you're looking at is you're looking at the close of the prior candle and the open of this candle. Take a look. That is a wide-ranging bar that Abercrombie & Fitch has not seen. So what it's doing, and take a look at the volume there, 35 million shares. Now, I'm not saying go out and buy this at all. In fact, if you were in this equity and you saw that, that's real positive. What's the first negative sign that you would see inside Abercrombie & Fitch? Where would you have seen some institutional selling? Most certainly, we saw some here that took place on February 22nd. So that was our first sign, because what we saw was about 13 million shares to the downside. And then what this did was just simply consolidated sideways. But we had a second sign out here, and that was on May 24th, a gap down with 10 million shares. And the key on that one, the key on that institutional sell, was anytime price got back up in towards that gap, take a look at that red horizontal line going across my screen. That's where the sellers, that's where people that were institutions that were trying to just simply get out of their position because they were comfortable with the gains that they had made. You can see how clearly, as price got back up into the level that we're talking about, is about 52.38, that's where selling began. And, of course, you're seeing them mark it down here today and get rid of significant holdings. So far, 5.6 million shares we've only been trading for 19 minutes. So remember, that volume here of 5 million is really going against this big breakout of 35 million. What does that mean? You know what? It means probably Abercrombie & Fitch makes its way all the way back to that breakout session of November 13, 2012. 877-927-6648. That was up 37. Be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Back, folks. Dow's up 30. S&P is up 8. Don't pay so much attention here to the Dow. In fact, right now, what I'm really focused on here is the New York Stock Exchange. We started off the show taking a look at the NYSE. That's up 60 points right now, almost a leader in the clubhouse here, up nearly 0.7%. Pretty decent net advancing issues at the moment, 1660. That would make it about a 3 to 1, a little over 3 to 1 net advancing issues over. No, 4 to 1. I take that back. 4 to 1 net advancing issues over declining issues at the moment. So decent market breadth out there. We know that the Dow, that has been the dog out here. That has been the weak link on the way down. Now, in the ES Mini on the 30-minute chart out here right now, it got up to 1649. That was a 0.786 retracement coming off of that little spike high that we saw yesterday at 3 p.m. as it got up to the 1655, 1654.75 was the exact number. So resistance here in the ES Mini that you want to be paying attention to, 1653 to 1656, 1657. That would be inside the consolidation box that we have here. That may be all that it gets out there, but that is, that's the area that you want to be paying attention to. We also now inside the go back to the McClellan Summation Index out here. Let me do this real. I probably didn't need to do that. If we take a look at I certainly didn't need to do that. Okay, here we go. So if we take a look at the move here yesterday, not yesterday, when was it? 2 days ago, on August the 19th. On August the 19th, what the New York Stock Exchange did for us, it gave us a great indication that we would see a market bounce. And it did that because the oscillator reading got down to a level of minus 310. Folks, normally you don't see these low levels inside the oscillator reading out here. We have seen them now 4 times just over the past couple of months out there. Really unusual. And when you see the oscillator get down that low, it's a sign of one of really 2 things. It's either a sign of a significant bottom. The last time that that it formed a significant bottom and the oscillator reading was down there, got down to a level like 295, minus 295. Make sure, I don't know if I said the minus was minus 300 or what have you, minus 310, a minus 295 out there. June 24th obviously formed a significant bottom. It's either going to be that or it's going to be a bounce and a little bit of a move sideways to a bounce. Well, that's what took place on June the 12th. That's also what took place when we saw the reading get down there on June the 5th out there. So that was a pretty good indication that the market should go ahead and retrace out there. Of course, if we take a look at the difference between this move here down in the New York Stock Exchange versus last time you would go back to the April 18th swing point all the way up to the high on May 22nd. And you can see as the oscillator was moving down in that negative territory, that minus 300-ish type of range out here, what you'll see is that it was actually doing a 0.618 retracement on the way down. What it's only done so far as the oscillator got down there, and it got down there very quickly, is we've only seen a 0.382 retracement inside the New York Stock Exchange. That makes you say, something to think about. So we'll pay attention to the 30-minute chart for the ES. We'll go after this next show. We'll go take a look at the indexes, what type of retracements we could expect out there. Currency-wise, we covered the euro, U.S. dollar. If we go take a look at the euro, Japanese yen, and that is the most important currency pair that you should be following. If we take a look at this, that had formed that Gartley buy pattern, that 0.618 Gartley buy pattern, and overnight it made the 0.786 retracement. But here's the thing, folks. It's doing it with a wide-ranging bar. The exact number would have been 131.70. It got up to a high so far of 131.63. Actually says it wants higher price. If it wants higher price, the direction of our market should be northward as well. Folks, it's Terrific Thursday. Have a terrific day. Always remember, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you soon. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.